prepared for this. So I've been investing in emerging markets for over 30 years. I was introduced to the group by Simon Vine. We met in Russia we met in Russia in 2003, talk about serendipity, and we stayed in touch. So what can I say? I invest in public markets, and there's been, if you ask me, possibly 3 stages of investing in emerging markets. One was when the concept was invented. And basically somebody came up with the idea is let's replicate a bond index, make an emerging market equity index, we'll put in the countries, we'll get weights, and it's going to look like the S&P 500 for emerging markets. And that was a great idea because what you had was a group of countries with homogeneous problems. Volatile currencies, bad governance, a lot of family-owned, publicly traded businesses, but were really being managed for the families, not for the minority shareholders. And we transited that stage, I would say, from the late 80s to about 2003. And we went through several crises, right? The tequila crisis in 1994, the Asian crisis starting in 96 towards 98. Russia had its problems in 98. Brazil had problems in 2000, so did Turkey, Argentina, a million times in the middle. And then orthodoxy came to emerging markets, helped by a very, very benign global and financial economic cycle. And some countries graduated. And so I was speaking to one of the attendees, Richard, before. Pre-2003, in the 90s, when all this really started, no central banks in emerging markets had orthodox economic policies. By 2003, about 75% of the places that were investable had some kind of orthodox economic policy, managing inflation targeting, and trying to control spending and the likes. And so we went into the global financial crisis with this new scheme of, some had converged more than others. And I think now we get to a point where emerging markets as a label for investing is not that apt anymore, because the same way that we started back in 1987 when the index was created with homogeneous problems, we have a lot of different problems. So remember BRICS back in 2001 or 2000 when they came up with that. There was, it was about demographics, it was about the power of the consumer, it was about using best practices and emerging. That group of countries, maybe one made it, and maybe it went backwards now. So that's the way I think you should look at emerging markets. It's a whole new set of individual opportunities. It's not one homogeneous block that you want to invest in because the dollar is going to be weak or because the Fed is going to raise rates. It's got to be looked at in a much more specialized, targeted, and opportunistic way.
Perfect. Yeah, stay there. So, can we, Roberto, you want to try it again? Hold on.
You guys hear me?
Yes, there we go.
I got a nice delay. Sorry about that. But anyway, nice of you guys to have me. Sorry I'm not there in person. Probably would be more technically adept if I were there in person. But anyway, my name is Roberto Brazinski. I manage a global emerging markets growth equity practice for a South African firm called Capital Works Investment Partners. And nice to see all of you, at least virtually. Some of you I know for decades, some of you I know for several years, and some of you I don't know, but I look forward to seeing you all in person in future events. Like Gary, I also have an emerging markets background for almost as long, although in my case, I'm a private equity investor with some private debt as well, historically. I agree that emerging markets is a kind of monolithic term that should be broken down into different kinds of markets, from frontier to more investable markets. I think importantly today, why does it make sense to even look at these markets versus other markets? Everybody knows that the U.S. is so overvalued at this point that it's eye-popping. Of course, we all hope it's going to stay that way, because otherwise our personal portfolios are going to be seriously problematic. Europe is looking kind of sclerotic, so that brings us to emerging markets. China was, a darling for a long time, but now for a combination of maybe valuations, geopolitical reasons, that's less of the case. Although, as I like to say, any company that doesn't have a China strategy is not a company you should be investing in. But having a China strategy is not the same as necessarily being in China, of course. But so if you kind of look around the world, you've got your emerging Europe, your emerging Asia, your emerging Latin America, and of course you've got Africa as well. All of them have opportunities and threats. We're focused as a firm on all of these emerging markets, but with attention to the what I would call middle income or more investable markets, meaning and why do we think about that? Whether you're a public equities or a private equity investor, having rule of law, having some visibility into exchange rates, having a fiscal policy that makes sense. These are all important items, and whether you can make a predictable bet, whether in a private sense or a public sense in a company. That doesn't mean that money can't be made in the frontier markets, and people have, of course, done that. But whether it's when it's a really high beta environment, when there's a background of let's say currency or fixed income defaults, for us as a fund, that's not something that we're comfortable making those bets. So, I think what I would say to you today is that that kind of high valuations for growth has not been lost on a lot of different investor kind of ecosystems. So that means that not only is the U.S. expensive, but emerging Asia is super expensive today. Most of it, particularly North and Southeast Asia. We're seeing more relative value, and that's definitely relative, not necessarily absolute, in companies coming out of both emerging Europe and emerging Latin America. So if we had to tell you what we see in the short to medium term, that's what we would see. But of course, things can change, and these very geopolitical kind of gyrations that are going on now may actually create more value for investors in Asia down the road. We'll see. So that's my commentary. That's my question.
That's great. Let's just get a few more perspectives. I know on him, are you on? From Johannesburg?
Hi, Mark. Yes, I am.
If you could just, maybe you can mute yourself, Roberta. There you go. Go ahead and just give a quick thought on Africa today.
Perfect, yeah. Thanks. And it's exactly, I think, as Roberta said, if you look at the USA, US and Europe and like, fast getting saturated and still lots of opportunities in there, but everybody's talking about Africa as the next big market. This year alone, we've had 7 unicorns, depending on how you define them, of which 4 have been fintech, or half of them also in Nigeria, and that's why it's a small number in the bigger landscape. It's only getting bigger. So I think, we have the largest population as a region, the youngest population under 35, and from the lens which I look through gender lens investing, the only continent that has more female entrepreneurs than male, who are typically, more educated, have a track record, but not enough capital being allocated to them. So right now for us, that's the full focus. A lot of activity here. I think within the first half of 2021, Africa as a region just far surpassed the targets, but even the capital raised in 2020, even during COVID times, and that's here to just grow even further. So really at the moment, anything that's on the continent, anything that's tech-enabled with specific fintech lens and health tech and ed tech, that's where we see a lot of the attention, a lot of capital being pointed and targeting perhaps 3 to 5 more unicorns within the next 6 to 12 months. So that's been an interesting time for us.
Great. And tomorrow we're going to talk about inclusion, and you also lead a fund focused on female-led companies, which is, we'll talk about that tomorrow. Zach Nasser, as you sit in Dubai, maybe your perspective, not just you're investing outside of the UAE and the GCC, but maybe how do you look at the GCC as a market where people should be allocating?
Thank you, Mark. Yes, our activities have been focused on the US, but I will share what's happening around me here in
nice background, but you need more light in your face. Sorry.
Am I not visible? I just tested it.
You're visible, but the background's more visible than you. It's okay. Keep going.
Okay. So what I was going to share, like among the families around me here, there's a chase for a couple of things. One is private debt and private credit right now. Even though among like the Arabic families, sometimes there's distancing from debt, but there are a lot of Western families based in Dubai that we are friends with because everyone's just given up on loans, not loans, on bonds at this point, so they're trying to find some secured form of debt. Another thing, that's Sharia compliant and it's hot right now is warehouses. One flavor of it, like Amazon warehouses around the world. I heard a story about one in Milan that got a bidding war sort of behind it because a lot of families see it as a way to track technology, but at the same time you're still holding a traditional asset like which is real estate. Similarly, like power plants in Europe, like different types, solar, wind. So there's been appetite for these sort of things in the last couple of weeks, last couple of months also. Real estate locally, I've seen different, tastes. Some are dropping residential and going for commercial. Again, developing warehouses in strategic places. But I know another NextGen actually that's doing like a purely residential strategy. I think he acquired close to $100 million of like different apartments and villas, and like he's gonna just like start landlording over these like assets, so nothing like sophisticated, not like a fund or anything. Just like plain old vanilla, just like owning real estate here. I have some comments on Africa. I have some friends that live here, but their businesses are in Africa. And they've been having trouble getting credit themselves, so what they've been doing is accumulating real estate in the UAE so that they take debt on the real estate and then use it for their businesses in Africa. So that's been like an interesting thing I noticed. And these are like families that are like many $100 million worth of revenue in their business, but still credit is tough, because I guess they're in Africa, even if it's Western Africa, which is meant to be, developed. Last thing I was going to share, also related to Africa, is like NBA academies that are like up and coming. Like Africa is becoming, a sourcing funnel for talent for the NBA. So there are things developing in that area.
Is that because the NBA players were just in town or something? NBA or NBA?
NBA, yeah.
Well, let's
so those are my comments.
Great, thanks. And if you don't know, Zach, and you do look better on my iPad, so it's our screen here, is a big contributor to our philanthropic and impact side, and you'll see him a lot tomorrow. So with that said, any questions or comments? And I'm sort of, Donnie, I'll move around, let's give it another 3, 4, 5 minutes of where we should be investing. Maybe you heard from Roberta, Helen, Greg, Zach, and questions, comments?
Hey, Mark, I've got a question. It's Ron here. Can you hear me?
It wouldn't be a session without a Ron Color reading questions. Go ahead, Rob, go.
All right. I don't think you hear it. Roberta, I'm going to maybe focus on you, but whoever wants to chime in, I saw him as well from Africa. You've been in the emerging markets for some time. I was curious, Roberta, has governance improved just given sort of the rise and the adoption of technology? I'd be curious as to, and then also to the extent ESG has kind of come in with respect to transparency. What are your thoughts there, Roberta?
Well, that's a great question, and Rob, you and I have been going to the same events for it's probably almost 20 years now, so that's pretty amazing. Glad you're still interested in these markets. They aren't always, they tend to disappoint as much as they elevate. But yeah, I think overall, at least in the middle income markets that we're focused on as a firm, I think you have seen, you guys still hear me? I'm hoping that you can. You have seen some improvements in governance, although again, from our point of view, we would always advocate, particularly if you're making a private investment and even a public investment, it's best when you have a company that may have operations in a market, but it is domiciled, headquartered from a legal sense, in a reputable offshore jurisdiction. So for instance, like an Indian company might be domiciled in Singapore, a Latin American company might be domiciled in Canada, an Eastern European company might be domiciled in Luxembourg, and that always makes it easier. So if there is some kind of legal issue or litigation, you're in a kind of Western standard jurisdiction. So, but that being said, I think you are seeing in a number of these markets improvements. You're seeing, roughly speaking, a reduction in corruption in some of these markets. You're seeing more of an understanding that foreign investment is important for the economy as a whole. So, and again, that's part of how we're differentiating between markets. We want to see countries that have demonstrated, in their governments and over a period of time, so it's not just one administration, but different administrations, that foreign investment, whether financial or strategic, is a key element of their continued economic growth. So I think you have to look for that. You have to look for those that, it's kind of self-selecting. Those governments that are looking for foreign investment are more likely to be, reaching out and to be more friendly and to be more public about that. And that's, I think, an important distinguishing factor.
I had a question for Greg. When it comes to the emerging markets, when you're thinking about the emerging markets, it's not one, where you're looking for opportunities, or are there any themes that are the dominant themes you're following?
So I think the most exciting themes are the same ones that people are looking for in the developed markets, right? So and that's why I was referring to the individual cases. So it's the innovation themes, the disruption themes, and then together with that, it's what's being done that's different than whoever set the pace, right? So the Amazon equivalents outside of the United States, what do they look like? What do they do? And you'll see that there's companies that have come together that, they leapfrogged, right? The same way that emerging markets leapfrogged landlines, because in a lot of these places you couldn't get a landline for your life, no matter how much you tried to pay for it, and went directly to having better cellular technology than we get here. I get better reception in Africa than I get in Penn Station. I'm not kidding. And so I think that's where you want to look at. I agree with Roberta in terms of you got to look at the governments, and that's kind of the thing about investing in emerging markets is governments tend to get in the way a lot, but sometimes they help a lot too. And so the combination of those two things. So it's not a particular country. So when I said the low-hanging fruit in emerging market has been harvested, I kind of look at it, just going back to the previous question, there's a very long, not E maybe, but an SG story that we've been arbitraging for the last 30 years, right? S and G was really bad, and it got a lot better, and there still has a long way to go. E is coming into the picture, and it's going to be interesting, and the companies that can provide solutions economically will be in favor. But the low-hanging fruit in terms of country selection, that's gone. I think that's gone.
So look, we could talk about this for hours, and we will and we should. But we're going to shift over to asset classes from geography. So let's thank our panelists, the impromptu panelists in particular. Thank you.
Come join our 361 firm community of investors and thought leaders. We have a lot of events created by the community as we collaborate on investments and philanthropic interests. Join us.